Yes, the IRS can see your crypto, and no, doing nothing is not a strategy. One small mistake and not filing your crypto taxes properly could cost you a ton of money, and I'm currently going through this myself. But here's the good news. Crypto taxes aren't as scary as you may think, and there are a ton of legal loopholes that most traders and investors entirely miss. In this video, I'm gonna break down exactly how taxes work on crypto, how you can save money legally, and also I'll be sharing with you guys a software that can help you out quite a bit for this upcoming tax season. So without further ado, let's jump into it.
Crypto taxes in the US. Here's how to maximize your savings legally. Okay, first things first, every single transaction that you make leaves a paper trail for government agencies to follow and track. So a lot of people think, oh, I don't have to report. I'm trading on so-and-so decentralized exchange. It's fine. Well, the issue with that is once you transfer that money back to a centralized exchange to cash out, they're going to question where that money came from. You absolutely must file your crypto taxes and do so without underreporting, okay? If the IRS suspects you of intentionally underreporting, that is quite literally a criminal offense. You can get charged criminally for that. As cryptocurrency becomes more mainstream, the IRS rules are changing. Coinbase has even stated recently that starting in 2027, if you don't file your crypto taxes properly, they will hold up to 24% of all your proceeds and send it directly to the IRS. The first thing you need to understand is crypto is classified as property. Crypto isn't a currency and it's not a stock. It's considered property. That means every time you sell, trade, or even spend crypto, you're triggering a capital gain or a capital loss. So if you've made money on crypto, that is a taxable gain. If you lost money on crypto, you can use that loss to offset any of your wins and lower your overall tax bill. Now, because of this, the wash sale rule doesn't apply to cryptocurrency as of right now. So let's say you have bought one Ethereum for $4,000. If the current market price of Ethereum is currently $2,000, meaning you are negative $2,000 in unrealized gains. Sorry, I don't know why this says gains. This should say losses. What you can do is sell your Ethereum to realize that loss on paper, and then you can immediately buy back Ethereum at the exact same price. So nothing has actually happened in terms of your portfolio. You're still holding one Ethereum. The only difference is that you have realized a negative $2,000 loss, meaning you can use that to offset any of the gains you had for that year, lowering your tax bill. So this alone is a major legal loophole that can reduce your taxes drastically. These laws can always change as well, guys, okay? Nothing I'm saying is financial advice. Okay, so let's talk about what counts as a taxable event in crypto, okay? So selling your crypto obviously is taxable. If you sell it for a gain, you owe money on that gain. Trading one coin for another is taxable. So if you are swapping a coin to another coin, that is also taxable. Getting paid in crypto, taxable. Mining, staking, or airdrop is also going to be taxable as well. This is classified as other income that you would put on the Schedule 1 when you file with the IRS. There's also short-term versus long-term, okay? So just like stocks, if you held your crypto for less than 12 months, the gains are taxed at your ordinary income rate. That is going to be the higher percentage. If you've held crypto for more than a year, you get longer term rates, usually much better. The exact percentages you are paying depends on how much money you have, how much money you make, where you live. A few different factors go into play here, but on short term, you can expect to pay around 30 to 35%, and on long term, you can expect to pay anywhere from 10 to 15%. So now that you understand that, how can you legally lower your tax bill? Okay, there's many different things you can do. The first thing is you can write off fees involved with your trading, right? So any fees that you make, if you're trading leverage, is obviously a write-off. Any sort of exchange fees, swap fees, you can write all of those fees off, okay? Any losses that you incur in your trading, okay? Tax loss harvesting. If you lost $5,000 in a trade, you can use that negative $5,000 to offset any wins that you have. Let's say you have $10,000 in wins, your total capital gain is going to be $5,000. So you're paying a lot less in overall tax. And again, if you are currently holding any coins that are underwater, what I would recommend, again, not financial advice, is to sell those coins, even if you plan on holding them, just to realize that loss, offset your wins, and then you can rebuy that token. Wash sales, obviously, is what I just said. If you are trading under an LLC, which I would highly recommend, you can write off office expenses, right? Electricity, subscriptions involved with your trading. That's why I'll say, join the Discord, getting access to the pro community is literally a tax write-off, okay? If you are trading under an LLC, any of these expenses, right? TradingView, if you have indicators, some sort of trading Discord is technically a business expense because it helps you with your trading business. So that is a business expense. You can write that off. Can you write off your full office expense? I don't know. I think it's only a small percentage. Make sure to talk to a tax professional if you have any questions. You can definitely write off any subscriptions. If you are overall net negative for the year, I know a few people that are net negative this year trading crypto. So what you can do is you can use up to $3,000 of your overall net loss to offset any income gains from that year. And any losses greater you can use to offset next year's gains. Okay, so let's say that you are negative $20,000 on the year in realized gain. You can use that $3,000 to offset income from that year, and the other $17,000 gets pushed to offset any gains the following year. So you're already starting next year at negative $17,000. So any gains that you make next year, let's say you make $20,000 next year, you're only paying taxes on $3,000 of that, okay? And there's no limit to how far it gets pushed. So if you're negative 2 years in a row, you can continue pushing those losses forward. Also, make sure to track smart wallet transfers between your own accounts, as these are non-taxable. If I send $10,000 in Bitcoin on Coinbase to $10,000 in Bitcoin on Kraken, I shouldn't be getting taxed on receiving the $10,000 on Kraken. That was a smart transfer from one of my accounts to another one of my accounts. Okay, a lot of people don't track this properly, or their CPAs don't track this properly. They view it as external income, and they're actually paying double in taxes for no reason. Last but not least, having records matters, okay? Use a crypto tax tool like CoinTally to automatically link with all of your exchanges and wallets, auto sort through all of your transactions, and alert you for when there are possible tax loss harvesting opportunities. CoinTally is actually a software that I am currently developing. We are launching within the next few months before this upcoming tax season. Think of CoinTally as your own AI tax buddy. Even if you're net negative in the year, we can push these losses over to the next year. So I'll leave the link to the waitlist down in the description below. For everyone that signs up now, you'll be locked into a lifetime discount. Keep in mind, this isn't going to be anything too crazy in terms of pricing. Okay, we made this literally as affordable as possible, and the whole entire reason that I am developing CoinTally is because, again, I am dealing with this right now. I have gone through this shit firsthand, and I know how much it sucks. Because here's the thing, if you file incorrectly or you underreport, even if by accident, not only do you still owe them that money, you owe that money back with penalties and interest, which is the worst. It can literally double your tax bill just with the penalties and interest. So taxes are very important. You guys don't need to use CoinTally, but I mean, how else are you really supposed to file your taxes properly, especially if you trade across multiple exchanges, multiple wallets? It's extremely hard to track. It's going to take you weeks to sort through all the transactions. If you want a CPA to do it properly, you're going to be paying thousands of dollars in CPA fees. So it's like, why even bother with that when you can just use a software like CoinTally to handle it? We also fill out the IRS forms automatically. So after everything is sorted properly, we will give you the Schedule D form to file directly to the IRS. Taxes suck. You can't ignore them. There are ways to reduce your tax bill legally using the methods that I've talked about in this video. But that's gonna be it. If you guys enjoyed, leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.